As young entrepreneurs and really entrepreneurs in general, they're going to launch their subscription business. There are some things that they don't think about, right? And insurance is one of them. It's one of those things that you don't want to be reactive to, you want to be proactive with, right? And so
Absolutely.
I think those that'll be watching and those that watch this afterwards, it's very important to be thinking about these different insurance policies that you need to have. And what we're going to do today is we're going to talk through them and make sure that you're fully aware of what you should be having for your business. So, Crystal, let's just start off. Let's go with for subscription businesses, what are the different policies that brands should have when launching?
Sure. So there's probably 3 key policies that are the most important to get started with. Those include your product liability, coverage for the stock, and then cyber liability. So the reason why product liability is so important is many times we see that our subscription box companies do a lot of business with manufacturers overseas, a lot of products coming from Asia, maybe South America. When products are not manufactured in the United States, the first company to touch the product ends up being the company that sits first chair in the event that there's a lawsuit. So if your product causes some sort of bodily injury to your customer, they're not going to go seek recourse from the manufacturer in Asia. They're going to look towards you, and transferring that financial exposure, that risk to your bottom line, really provides the company with a valued asset. So really, when you look at your insurance program, you should be looking at how it's going to protect your balance sheet. And that's one of the most important components. The other one, of course, is the stock. Damage to your stock could mean months worth of your products, your boxes not going out. And so depending on how you structure the insurance on the stock, you can actually not only cover the damage to the stock, but also the loss of income as a result of not being able to sell it. So those are really important components. And then, of course, the cyber liability for us is really important because all of these subscription box companies are all doing one thing exactly the same, and that is having their customers sign up online.
Right.
And so as customers are providing you with their pedigree information, their names, their addresses, their phone numbers, credit card numbers, when they provide that to you, you are responsible for maintaining it. So compromising any of that information could really mean some serious financial pitfalls for the company. So a cyber liability policy addresses many things, anything from defending you against a lawsuit from your customers for not protecting that information, to paying for the notification costs for each state that requires that you send notifications to customers when you have information that's been compromised. They do things like call centers and provide forensic investigation, which helps to determine how the bad actor got into your system in the first place. So it's really an important component, and something that all new companies should make sure that they have in place from the beginning.
To go back to the stock insurance, if a brand is getting their product from a U.S. manufacturer, so let's say I get socks from Nike, to put in that case, is Nike responsible? Or
yes. So Nike's probably having someone in Asia make those socks.
Right.
But because Nike is the brand here in the U.S., then they would be, you would be able to seek recourse. However, there are subscription companies that tend to put their own name
on
I know. Product, and that's where...
That was going to be the next thing I said. So if it's a subscription box that's sourcing their own product, branding it themselves,
right,
this is why you want to have that insurance policy in case that product causes any harm to any of the consumers.
Right. And even if you have a big name brand who's providing the product, you still want to have that policy in place for the defense, because just because it's going to get tendered to the bigger name doesn't mean you don't have to respond to the lawsuit when it first hits you.
And then obviously, if you're inventorying, you're doing your own fulfillment and you've got inventory, that's another good insurance policy to have. Fire, a flood, something happens to it.
Absolutely.
That's like a no-brainer. But, how does how much is insurance? I mean, ballpark, right? Like, how does it scale based on how much inventory you have and how much you're buying and giving out to customers? Is it based on revenue when it comes down to the liability protection on stock that you brand yourself?
Sure, absolutely. So when you're looking at the stock insurance, it actually uses what's called a composite rate based on your company's revenues, the estimated revenues that you're going to have, and the estimated product that you're going to have in storage throughout the year. So one of the unique features of a subscription box company is that your inventory fluctuates a lot throughout the year. You might find product at a really good price that you want to buy bulk of to put in future boxes. And so your inventory limit goes up for a few months or for several months. Yep. So that's one of the reasons it's really important to make sure that the insurance broker that you have working on that policy or all your policies understands the uniqueness of this business and how to structure the insurance so that you can make adjustments throughout the year.
That makes a lot of sense. And I think that brands, probably a lot of them have this product liability insurance. Mm-hmm. Let's go back on the cyber liability. I bet you a lot of them don't have that. Where have you seen things go really sour for brands that didn't have something like this?
Well, for us, we always include that in our presentation, right? So none of our subscription boxes don't have that coverage. I can tell you that there's been situations where claims have come about that you wouldn't necessarily even imagine would turn into anything, and they turn into some significant numbers there. So I would urge even the newest of subscription box companies to look into this insurance. It's not very expensive at all. And at the end of the day, if it's a policy that can save you hundreds of thousands, if not more, in the event of a loss, it's worth the few $1,000s that it costs to get it going at the beginning.
Yeah. And then, you see some, you see that there's sometimes these attorneys that have been filing lawsuits on brands that they might say are not clear about the renewal process. I'm very familiar. I went through that with one of my brands, and several other individuals that I know have gone through that, where there's attorneys out there that they look for every little missing check mark or not clear up front on the email when it's clear up front, but they look for every little detail. Do you recommend any sort of E&O? Is it E&O insurance, right? For something like that?
It's funny that you say that. One of the most important things that a new company can do, really for any class of business, and not just new companies, existing companies, is to make sure you're aligning yourself with those resources and vendors that are going to be able to provide you the guidance that you need. And one of those is making sure that your website is compliant in all states. Right. And definitely California is one where it is very hard to stay compliant, but it's a necessity if that's where you're going to be doing business. So I would say that the insurance is there to address as many insurable losses that can be addressed, but there's always going to be things that your contract has to be structured a certain way in order to make sure that you're protected as much as possible. And of course, legal should be reviewing, and professionals regarding your website should be reviewing to make sure that you're in compliance.
Yeah, that makes a lot of sense. I know those lawsuits can cost a lot of money, and they try to settle, and I mean thousands upon tens of thousands of dollars. And as you're bigger, it can cost even more. So those are really 2 or 3 main insurance policies you should have as a startup. Now you start to scale, right? You're building a bigger business. Right. You had a $5, $10, $20 million business. What are now policies I need to look at?
So now at this point, you're talking about the involvement of outside investors. People are investing money into your idea because they see the possibilities, and the decisions that you make on a day-to-day basis managing that company are decisions that you can be held personally responsible for. So not only do we want to protect the balance sheet of the company, but we also want to protect those who are running the company on a day-to-day basis because they do have a personal exposure. So we look at management liability. That's sort of the next step as they grow. And one of the most recognizable coverages under that umbrella of coverages is D&O, which I'm sure many are familiar with that term. Basically, as your company's growing, you want to entice more investors to join. Directors and officers coverage is something that they're going to want to see that you have. And of course, as an owner of your own company, you want to make sure that the C-suite is properly covered and addressed, because you owe it to them to make sure that they have that protection.
Is it
really?
Oh, sorry, go ahead.
I was going to say, when you look at insurance, you're looking at a vehicle to transfer risk to. So I imagine that for most, if not all, members that are listening, creating their unique box required a lot of time and energy, blood, sweat, and tears, and a lot of money. I'm sure a lot have invested their life savings in creating their box, because this is their idea that they feel is going to make it big. And one of the best ways to protect everything that you've put into that is to transfer as much risk as you can to a third party, that third party being an insurance company.
So I don't know if I'm echoing. Sorry if I am. But, part of that is too, like, let's say you have a huge company, right? And then like one person in management does something rogue or like says something inappropriate, like, and is damaging the company. Does it protect against that?
So there's different coverages to address specific instances. If you're looking at an employee harassing another employee, you're looking at employment practices liability. If you're looking at an employee stealing from the company, that would be crime insurance. So there's different policies that address different exposures. And that's, when you're looking at the exposure as a whole, so the entire company, one of the most important things to do is make sure that you have someone, an advisor on your side who understands the ins and outs of the company, where you are now, where you want to go, and how you're going to get there, and really allows for that person to become an extension of your business. So you can't necessarily afford a risk management department right now, but you should absolutely look for an insurance agent who's going to provide those services as part of what their deliverables are. So that includes not only placing the insurance, but contract review and loss control services. And in the event you have a claim services. Those are all really important factors.
Somebody asked a question: if you don't have investors, but you're a scaled company that's building, is there any policies you recommend?
If you don't have any investors, I'm assuming that they're asking, do you need to have the D&O insurance? Even without investors, you would still be applicable to have D&O insurance. You could, be potentially sued by customers or vendors for the way that you're running the company. Decisions that you make could financially impact you on a personal level, for sure.
Yeah. And so I think for you listening, the moral of the story here is you want to have this protect. It's something that you want to have, you don't ever have to use, but you want to have it just in case. And I've seen this crush businesses. So it can be a big headache, right? So for those of you watching, I think it's really important. Crystal, if somebody has questions, they'd like to learn more, or they want to reach out to you to learn more about policies, how can they do that, and where can they reach you on?
Sure. You can visit our website at www.centuryriskadvisors.com, and our contact information is on that website. Feel free to reach out to me directly. I'd be happy to give you some consultation and see if there's anything we can do to help.
Amazing. Crystal, this was awesome. I appreciate you being on. I appreciate you and the Century Risk team jumping on and be willing to give as much information to help the community. As all of you that are watching, as you know, we get on every Friday at 2, so make sure you put this in your calendar. We're trying to help you grow, help you build your business. And again, if you have any questions, reach out to Crystal. And if you happen to need me for anything, as always, feel free to DM me. Crystal, thanks so much for being on, and I will talk to you soon.